Hello and welcome to this week's edition of Econoday Unplugged on Tuesday, 21st of July 2020. Mark Pender is stateside and I'm Jeremy Hawkins in London. I thought today we could kick off with a look at how Europe is finally trying to get its act together regarding the economic fallout from the COVID-19. So after 90 hours of often acrimonious discussions, EU leaders very early this morning, European time, signed off on a new recovery package worth some 750 billion euros, funded by what will be by far and away the largest ever issue of joint debt in the region. The 750 billion headline total was in line with the EU Commission's original proposal, but still well short of the €1 trillion plus that the ECB had previously suggested, and even getting agreement on this lower figure needed the longest summit in some 20 years. Moreover, reflecting the compromises required to get the package past the so-called frugal four, so that's Austria, Denmark, Sweden and the Netherlands, the grants component of the dispersed funds was pared to 390 billion euros. That's more than 100 billion euros less than what an earlier Franco-German initiative had hoped for, and leaves loans to account for the remaining 360 billion euros. Even then, it also looks as if there were some sweeteners provided in terms of larger rebates for some countries on their contributions to the EU budget. So the good news then is that there has clearly been a positive step towards creating a harmonised, coordinated European fiscal policy. The not so good news is that the coronavirus has made policy splits between the member countries all the more obvious. The 750 billion euro package itself has been very slow in coming, and it's worth only around 6% or so of EU GDP. It also still has to be approved by all 27 EU member parliaments, so its near-term impact will be minimal. What it means for financial markets is that there will be now a new so-called coronavirus bond that investors will be able to purchase. And for the ECB, the deal is doubly good news, as not only does it mean that there is now at least a little less pressure to ease monetary policy further, but it also provides a new asset in sizable volume that it can use as part of its quantitative easing programme. The ECB left policy unchanged last Thursday, and the likelihood has now increased, at least slightly, that they'll do the same again at their next meeting on September the 17th. So if I were a teacher, overall, I guess I'd give the plan a B+. Not bad, but ultimately must try harder. Bond spreads in Europe have narrowed slightly today in reaction to the news, and stock markets have rallied modestly, but that was probably at least partially due to the latest more optimistic news on getting a coronavirus vaccine. So on the whole, what about your side, Mark? Any interest from the state side on what's going on in Europe?
Well, certainly. The U.S., of course, has already established a broad package stimulus,
and a much larger one as well.
A much larger one, and about 3 times the size, I guess. And but now the question is that will there be a new stimulus package? And it's a interesting question for the U.S. because we had bounce back strength in May and June in consumer spending and employment, but in actual retail sales have actually returned to their levels in February, and I haven't found that anywhere else yet. In production numbers elsewhere or in consumer spending numbers elsewhere. But will that continue or will that collapse now in the month of July? So that's the question here. It's an election year. There's a lot of doubts whether or not Washington will be able to put another package together, which would raise the risk then of deterioration going into the November election. But let's talk about Europe. First of all, it's just some nuts and bolts, if you could, with the 27 members, for instance. The first observation I have is that the UK was not part of this at all. Is that correct?
That is correct. So we won't pay into it, and we also won't get any benefit from it, bar the knock-on effects of potentially slightly faster continental European growth. But you're right, the UK is not part of this.
And there was no representation at all?
No.
Okay. Now, the other question I have is The conservative part, or the Northern European part, I was reading, also includes Finland and Sweden. Now, what is their status in the European Union, and what is their approval, and why is their approval necessary?
Well, in terms of the European Union, all members effectively have to agree when there's a significant shift in policy. So as far as Sweden's concerned, it's not a member of the Eurozone, so it still has its own currency, the Swedish krona. It doesn't use the euro like all the Eurozone member countries. Denmark, well, that's part of that's also part of the European Union. So again, that has a say in terms of what happens to overall policy. Now, again, it's not part of the Eurozone per se, although they effectively peg the Danish krona against the euro, but they are part of the wider European Union. So all these various member countries have a say in getting big packages through. And the big problem becomes the fact that any one member country could come out and issue a veto, and all of a sudden the package doesn't work. So, for example, within this particular set of discussions, there was some major issues concerning the likes of Hungary and Poland, because there are efforts to try and get attachments to basically acquiring some funds in terms of what's actually going on in your own country. And there's been a number of political difficulties between Brussels and some of what's happening in the way the media are being treated, the law courts are being treated in both Hungary and Poland, which have gone down very badly.
But they've had those two countries have had limited COVID troubles. Is that right?
They have had, although it's got to be said, there are some patches, sort of these clusters, as they call it, localized clusters, which have been springing up within the Eastern Bloc.
Well, do they stand to get any money from this?
They probably will do, yes. I mean, they're part of the European Union, and this is a European Union-wide recovery fund. It's not just the Eurozone. So, yes, they do stand to get money, depending upon what state the COVID is and so on going forward. But we don't know the full details of how it's going to be allocated yet, but it certainly looks as if probably the two biggest recipients are going to be Spain and Italy, where Italy's hit hardest.
This is going to be a giveaway to those two a major what's the word I want? Relocation, that's not the word, of money from other states to those two states,
Yeah, effectively, yes. Effectively, I mean, if you like, you can see that everyone puts in, but some people take out more than they put in. Now, ultimately, of course, in terms of putting in, is coming from the financial markets, because this will be funded for the first time ever by this huge European joint debt initiative, which private investors can purchase, and obviously the ECB, you can bet your bottom euro they'll be busy purchasing as well. But it'll be the first time that the European Commission has actually gone to financial markets to borrow with a view to dispersing funds directly to its members.
So the members are all guaranteeing these bonds. Is that correct?
Yeah, effectively, it's going to be pan-European sovereign debt. Now, that means that it'll have an interest rate which would be, let's say, somewhat above where it would be if it was just a German debt issue. So if it were in bunds, which effectively provide the lower benchmark for Europe, and would be somewhere between that and presumably somewhere between that and what we see on the likes of Italian BTBs. And one of the main beneficiaries we've seen as a result of today's announcement is that spreads between the harder, financially regarded being more secure countries like Germany rather, the likes of Austria, we have seen spreads between those countries and the so-called the Eurozone peripherals, the likes of Spain, Italy and Greece. Those spread differentials has been narrowing, and that's because of the fact that these less well-developed countries will be getting more funds on out of the allocation.
Well, what are the risks for, let's say, a Finnish taxpayer, and what is the benefits for a Finnish taxpayer?
Well, the benefits at the end of the day, I suppose you've got it on the broader basis. What's it going to mean for the European Union economic recovery? Now, Finland, by and large, as I understand it, has come out of the COVID-19 crisis pretty well. And surprise, surprise, they've been one of that block of countries which has been, let's say, a lot more reticent about the size of the package than the likes of Italy and Spain were, who stand to benefit the most. So we can really put Finland in with Austria, Denmark, Sweden, and Netherlands as that group's called the Frugal Four, but essentially you can put Finland in there as well, because they've been reluctant to put funds into something they're not effectively going to get back.
So the Finnish taxpayer, how do they sell this to the Finnish taxpayer?
Well, for the Finnish taxpayer, and this, of course, is going to be funded from financial markets. If it's funded at very, very low interest rates, then it's essentially just the same as the Finnish government going out and borrowing money with a view to stimulating its own economy. So, but this is done on a pan-European basis rather than simply being localized. Now, the good thing I think for all the borrowing members is that we haven't got massively wide spreads anymore between the likes of, say, of Germany and Italy, which would have inevitably raised the average cost of the coronavirus bonds, the interest rate, I should say, on the coronavirus bonds. If things stay as they are, the actual borrowing rate, like so much around the world at the moment, is going to be very low. And to that extent, it actually makes it a sensible time to go out and do something like this.
Well, they have to pay the bonds back. And who is that? Is that going to be a quantitative easing, a printing of money by the ECB?
No, almost certainly not. And that would be monetizing the debt, which the ECB is completely and utterly loath to do. No, this thing will ultimately come out of the overall EU budget. So EU member states will have to pay into the budget to actually pay off these coronavirus bonds ultimately. And so that, of course, will come out of individual members, payment of taxes and so forth.
So the taxpayers in Northern, let's just make a generalization, are going to be funding this recovery for the southern states?
In its most simplistic form, yeah, that's right.
The comparison between the U.S. states and the European states is, I guess, a metaphor or a conceit. But here in the U.S., there's not a reallocation of wealth from the Northeast to the Southeast. That hasn't happened, but that apparently is happening in Europe.
Well, this is, to be honest, this is the first real sign we've had anything in that kind of direction. Yes, taken at face value, this would suggest that Southern Europe is going to do relatively well out of this compared to Northern Europe. Now, for the likes of, for example, if you take the ECB view in all this, and as mentioned just in the intro, that they're going to be more than happy about this because it means that we finally got some fiscal stimulus coming out of on a coordinated basis, and they got new assets that can keep expanding their balance sheet. But their view is, when it comes, push comes to shove, this is going to benefit the European Union as a whole. So even for those countries who perhaps put in more, they're going to get out. They can benefit by virtue of the fact that European Union economic activity in general will be that much harder than it would have been otherwise, which will be to the benefit of everyone. And the other, I suppose, a caveat to this is just to mention, when you look at it, it's not. Well, I think on the whole, the politicians are talking this is historical pivot point and all this. Well, compared to what individual national governments like, say, the likes of Germany or Portugal have been doing on their own bat already, just from their own budget deficits, they've done an awful lot more than this is going to amount to. So yes, it's kind of politically, it's something the major step to see them all operating off the same or singing off the same hymn sheet for once, but it's still a relatively short hymn sheet. And as I mentioned, say, in the introduction, it really looks as if some of those countries who really didn't want to see, the grant numbers being even as high as this, and they managed to massage the grant share down, they've actually managed to wangle some larger rebates from their EU budget contributions. So, although they put more in, they've actually managed to claw a bit back at the same time. So it's still very much a far from harmonious, package in terms of the way thing was put together. And that, I think, is still one of the big issues for the euro itself. Now, I've got to say, the euro has reacted positively to this. Not hugely so, but it has reacted positively. Although, again, there may be underlying COVID-19 currents about what's happening to stateside in Europe, et cetera, which cloud the picture.
Uh-huh.
But I think there's still this kind of sense that Europe's got away with it today, but it's taken them 4 days to come out with an agreement on this thing, which was supposed to be a 2-day discussion. It was very nearly, by a matter of about an hour or so, the longest ever EU summit there's been, just to try and get this thing sorted for is ultimately not a massive package.
Well, I have another. Yeah, well, that's interesting. But I have another question. When you look at the European data, I'm talking about economic data. There's contraction everywhere. It's just not Italy and Spain. And of course, if you look at the COVID numbers, well, Italy and Spain are the most severely impacted. But how economically did those two states suffer significantly more than Germany? Or
I'd say on the basis, again, we've only got particularly limited hard data. Obviously, we've got the surveys and things like that, which are may or may not be right. But in terms of the hard data, what we can say so far, I think, is that Germany has actually got away with it quite well. In a sense that the downturn there has been relatively mild. If we look at the output and the demand figures coming out of the likes of Spain and Italy, the hit there was much harder. And within that, it's for Italy, for example, you've got the relatively wealthy northern part of Italy, and you've got the much poorer southern part. And it's the southern part, again, which has been hit the hardest. So, for a long time, there's been the issue within Italy of whether or not the north should be funding more to the south and so on. And it's been that sort of discussion, which in the past has even talked about Italy breaking into two, because perhaps northern Italy could stay in the Eurozone and southern Italy wanted to be out of it, et cetera, et cetera. So it really is. It's a can of worms, this thing, which gyrate and different things happen at different times. Well, I think it's fair to say that Italy and Spain in particular have suffered disproportionately.
Well, a week from Friday, we're going to be getting GDP numbers out of Europe. They're going to include France, which may be doing better than anyone, or at least have survived, and Germany, and also Italy. I mean, what are you going to be when you look at those numbers? What are your expectations?
Well, they're going to be horrible. We know this. We know that.
Is Italy going to be significantly worse?
We got so little data, it's hard to say. But yeah, I would be very surprised if we don't see Italy being significantly worse than, let's say, somewhere like Germany. Almost certainly that's going to be the case. I say it's hard to say because if you take something like Italian retail sales, they completely fell out of bed during the first couple of months of the coronavirus. But then when we got the main numbers coming in, they're up, remember, something like 24% on the month, still leaving a big gap. But the data are so volatile at the moment, and a fairly large chunk of some of these indicators is essentially being imputed by the stats guys, effectively making them up. They don't know what they are.
And the Italian stats guys are saying that we got hit the worst. So the word I wanted is reallocation of wealth. Is that what we're seeing here from north to south?
Yes. Ultimately, that's what it is. We're talking about the richer countries and those which have been less hard hit by COVID, providing some help to those countries which have been harder hit, which at the end of the day is what this whole European Union is supposed to be about. It's supposed to be a united front where one country within the European Union will be prepared to help another. The problem, I think, that's coming out of this, it still suggests that individual countries, the way they negotiated over the weekend and through yesterday and overnight, it kind of intimates that A, they want to maintain as much sovereignty over policy as they possibly can do, and B, they're always wanting to put, not surprisingly, their economy, the good of their national economy before the good of the European Union as a whole.
Okay, well, let's turn now. You had mentioned before about QE. Now they have another batch of bonds to buy, the coronavirus bonds. Now, this to me is a hazy thing. They're not monetizing the debt, yet they're going to be significant owners of these new issues. How much? What percentage is the guess that the European Central Bank is going to be holding of these bonds?
Well, at this stage, we don't know, but I suspect it's going to be, well, I suppose we've got to say it depends what the yield is for a start. I think one reason why we can say, just going back to talking earlier about the way these yield spreads between the likes of German bunds and Italian BTPs have narrowed so much is, yes, we got this package, which is good news for Italy, but also we're still in this environment whereby investors are desperate to try and find something with a positive yield on it. Most
Uh-huh.
of the German curve's still negative. So I
Uh-huh.
think, for the coronavirus bond, if it comes out and is perceived to be offering a reasonable yield, you're going to get private sector investors wanting to buy it, as well as the likes of the ECB. Um, my guess would be, given how much the ECB is buying these days, and obviously we've got this 20 billion a month net asset purchases through its old asset purchase program. We got
Mhm.
this 100, what remains of 120 billion temporary envelope, as they call it, through year end. And of course, the all important pandemic emergency purchase program. There's a lot
Mhm.
of buying there that the ECB will be doing. So I expect they're going to end up, I don't know, a third or so of this of the overall market, perhaps more than that. I really
Wow.
don't know at this stage.
Okay. Well, another a question I have. This is a theoretical question. If the ECB didn't exist, if these were all individual national governments, I presume that the ECB, in its QE program, is helping to narrow the spreads between the
Yep.
peripherals, and so they're keeping the united front together. That's a very important part. Where would the yields be right now if there was no ECB, if they were just individual national countries?
You don't ask easy questions, do you?
I
If
mean,
you
would
believe,
yeah,
if you believe what the ECB have said, according to some of their surveys, they think, I think the combination of their the asset purchase program we've had in the past, together with the current programs they've got running now, I think they talked about it having subtracted 100 basis points or so off the level of yields compared to where they would have been if they, at least if they hadn't
uh-huh.
intervened on the quantitative easing side. But of course, if we had just individual national governments doing their own thing, then yields on BTBs could well be, I don't know, 5-6% or something like that now, because
Uh-huh.
it wouldn't have the strength of the ECB behind it.
Uh-huh.
People would be very nervous about Italy. Again, it's the old Jay's thing. What would happen if the Eurozone fell apart now? Everyone would buy bunds. They might
Uh-huh.
buy some Austrian debt, some French debt, and they would sell Greece, Portugal, Italy, Spain, the old
Uh-huh.
candidates. So you
Uh-huh.
would see a huge widening of spreads and a big increase in yields.
Uh-huh.
But you're right. I mean, and it's funny you mentioned this thing about ECB keeping yield spreads down or helping to narrow these spreads. It is hugely important. And one of the first mistakes that Christine Lagarde made when she came in as the new ECB president after Mario Draghi, in one of her press conferences, she intimated that the ECB was not there to narrow yield spreads. And that saw the Italian BTP market being dumped. And she effectively had to come out just after that. And although without saying it's, completely saying the opposite thing,
Uh-huh.
various communiques were put out to the effect that it is very important that spreads narrow because the ECB regards the spread as being an indicator of financial stability and everything else.
Uh-huh.
So you can bet, so your bottom dollar, the ECB is very much alert to the fact that it wants to see, the spreads narrow as far as possible as a sign of, financial market confidence in the way the euro is progressing.
Now, this is going to be I'm going to present something that's a little awkward. Um, that is, does Italy and Spain just have their hands out? I mean, can they just, some people borrow, will take money, and some people say, no, I insist, I'll pay it back. I mean, they're not going to be paying this back. And
Well, I say it's a split, of course, as mentioned
what,
in
it's,
the
what,
intro.
400, 390 billion euros are going
Uh,
to be given away in grants?
Yeah, that 390 in grants and 360 will be in loans. And that compares, say, originally, Germany and France, of course, will be a couple of countries that we're putting quite a lot into this. They're desperate to keep this European Union and the Eurozone together. They were calling for 500 billion worth of grants. And that was something this so-called frugal four were completely against and wouldn't allow to go through.
And
but the rest will be loans.
there was no insistence anywhere on the periphery of these countries that no, we do want to pay them back eventually. They're just going to take the money, this reallocation,
Well, I think yes. As far as the grants are concerned, that's it. They regard it. Well, look, we're really in dire straits here due to the coronavirus. We need help. We're supposed to be part of a European Union. Where's the help from the centre? And prior to this thing, there hasn't really been any help from the centre.
Mm-hmm.
So this is an opportunity. It is at the end of the day for European politicians across the union to show that they are prepared to act as one.
And I guess what I'm really getting at is this going to trigger a nationalist, a political, you know what I mean, in the northern part of Europe that we have other people in our family who are just taking our money.
Yeah. Well, I think we've been in that kind of environment for a while now. Yes, there's certainly going to be, a move out of those countries which have to, let's say, dish up most of the dosh. Some people aren't going to like that. Having said which, of course, I still think the overall size of this package isn't that great. So it's going to give, I suppose, some grist to the mill of the more nationalistic side of the political spectrum, but not to the extent I wouldn't have thought, which would cause, the euro any real problems at this stage. And I guess you can kind of see that from where the financial markets are operating at the moment. But of course, it remains to be seen if we have the much talked about second wave of COVID-19, it may turn out, well, this 750 billion is nothing like enough in the first place. So where do we go from there?
Yes, that's the ultimate question. Now, it seems like there's a sense of resolution, but there has been no resolution yet with the virus.
Oh, that's right. And that's why I think, it comes in talking about the economic data at this stage. I mean, you've got to feel sorry for these central banks trying to forecast what's going to happen in the second half of the year when they're setting their policy parameters, because they've got no better idea than anybody else has. Mm-hmm. If we know there's going to be a vaccine that's going to work, then you can actually start perhaps to make some sensible predictions. But at this stage, it really is up in the air.
So as for the UK, I mean, is there a sense of relief that you got out in time?
I don't know. It's a very mixed view. Of course, as you know, the vote on the EU referendum was so close, and since then, I guess most of the polls have suggested it's going into the election last December. The polls suggest that the pros and the anti-Brexit sides are so close now that it's hard to say. I think there's still a belief amongst those who thought we should be remaining in the European Union that they wish we were still in it. For those people who thought, no, well, we shouldn't be we never want to be part of the Eurozone anyway, we should be out of the European Union too, then it was a good thing to do. And I guess to some extent you can say, they found some support from the fact that the UK government did what it did. And again, it's launched a massive spending program over here, much more so, well, umpteen times more so than we've seen coming out of the European Union Commission.
Now, what does this mean for ongoing economic data? Where are the funds from the coronavirus bonds going to go? Is it going to be invested in infrastructure or so?
Well, yeah, exactly that. And most of this is supposed to be going into various forms of investment infrastructure. And as far as they can do it, they want to try and adopt this green policy whereby most of the expenditure, well, as far as they can do, is going to be directed more towards greener based companies and towards those companies or structures or institutions, wherever it may be, that are less green, let's say. But we don't know. We don't at this stage know the details of what the allocations are.
Huh.
Okay, what else should we be mentioning? I suppose quickly, well, since we're on Europe, I should mention in terms of the data this week, it dominated very much by the flash July consumer reports we'll get out of Germany and the EU Commission on Thursday, and in particular, of course, the flash July PMIs on Friday. The composite output, flash composite one for July for the Eurozone as a whole is expected around about 51. So a return to positive growth taken literally, but from such a low level and I guess such a weak rate that even if it's correct, you'd barely notice it. So again, it fits in the idea of certainly no V-shaped recovery in Europe at the moment. What about your side? Well, how about PMIs looking your side?
We had the June PMIs, the ISMs, the Institute for Supply Management. They came in over 50 with key readings, very strong new orders on throughout the manufacturing and non-manufacturing samples. The market PMIs were more subdued, more around the 50 area. But sentiment here is kind of split. Expectations are clearly have receded the last few weeks with the new restrictions and the really the unexpected rise in the virus. But the current conditions have been doing, compared to where they were in April, are improving substantially. But at the same time, these expectations, like on the Philadelphia Fed's expectations, this is a survey that goes back to 1967, and the business expectations fell the first 2 weeks of July, like the fourth worst in history. There's been a lot of tough times, and we didn't really know that July was that much of a tough time, but it did take a toll. Now, to return back to the coronavirus bonds, is this going to help business expectations in Europe, and will consumer expectations also be helped?
I think it helped a little bit because it's all over front pages of European media today. So I think it will be seen. Well, hey, look, we got the EU Commission finally trying to do something about helping the region's economy. So I guess that's got to be a positive. How much of that actually feeds through into what I suspect is still somewhat dubious businesses and consumers, which may not fully understand what's going on anyway. That remains to be seen. But yes, I think you've got to say, if nothing else, it's a step in the right direction, so it should be at least a small plus.
Well, and one last little question: who thought of the grants? Who can that's kind of a nervy thought to even think of, right? It's like you can have long-term loans and all and different kinds of those things, but to actually give the money away, when did that get into the conversation?
Well, that I think really came up. Go back into 2 or 3 months or so ago now, and that came out of a Franco-German summit. So we had Macron and Merkel discussing what needs to be done to address the coronavirus issue, and it was they who came out with the idea, let's say, talking about 500 billion euros worth of grants. And there's a couple of things to say about that, I suppose. One, they realised, at least had some appreciation of how bad the situation could be. But more importantly than that, since they both represent two of the two largest countries or members of the Eurozone, indeed of the European Union, so they knew that they would be putting money up front rather than taking it. It's also a reflection of the fact that they've become increasingly concerned about the political pressures or tensions between members that the coronavirus had brought about on the European Union. And particularly by that, we're talking about the likes of Italy, whose government has gone out of its way to make it perfectly plain that it's been hugely disappointed with the way the European Union, the likes of the Commission, have looked at its situation and given it some help. As far as Italy's government was concerned, well, look, we're in dire straits here. We need help. Where is it? And they hadn't received anything. And I think it was Franco and France and Germany who realised that if we don't actually do something about this, it could be the case that Italy pulls out the European Union. And that is something they really don't want.
And traditionally, those two countries, I guess, especially Germany, and the idea that if they had their own currency, the mark, it would be highly valued and it would actually hurt their economy. So they see their interests in holding Europe together. They see their economic interests in holding Europe together. Is that right?
They are, yeah. France and Germany are desperate to make sure that this whole European project works, period. And that to them, you can see in the way policy's been operated in the last several years now. In fact, without Merkel, it's quite possible that, the Eurozone might have fallen apart during the previous financial crisis. But France and Germany are desperate, to make sure that the euro survives.
What do you think of the political cartoons? I can almost imagine, the Merkel had with a bag of money.
Well, it is. Talk about going from a black hat to a white hat or something like that. I'm sure there's something to do with that if you're good at artist. Yeah. Okay, I think we have probably prattled on for long enough now. So
thanks for that. Thank you, Jeremy.
No, not at all. And thanks to anyone who's still listening. So I think we'll end it there for today. But as always, we'll be back next week. And in the interim, all the key market moving data and events can be found in Condé's global economic calendar. From Mark and myself, thanks as ever for listening. Stay safe, and we'll see you next time. Bye for now.